What's going on, everybody? Blake here with Trade Tracer. I really hope you're enjoying this weekend. We're going to go ahead and kick things off right here with the S&P 500. I got the SPY pulled up here on a daily time frame. As always, if you like this content, make sure you hit that like and subscribe and hit the details in the description to follow me on Twitter and also receive free signals. As always, none of this is financial advice. Always trade and invest at your own risk. So we are coming out of a massive uptrend, and technically, from a technical perspective, we are currently in an uptrend because of this Thursday candle close at all-time highs. So on Thursday, we did close at all-time highs, but this isn't the type of candle that I love to see. It wasn't a bullish thrusting candle. And then on Friday, we actually did close back below that 418.25 level that we've been talking so much about. We really need to see price above this level and ideally back above Thursday's high before I start getting more confident and having more conviction in my trades for swing long in this market. So currently, one of the things that I want to bring up is the momentum. So I use the MACD as a momentum indicator. And as we can see here, we have price continuing to move higher as the MACD has actually crossed and moved lower. You can tell from the MACD histogram down here, we're getting more and more red candles to the downside and deeper candles as well as price is moving higher. One thing that I know for sure is that we cannot continue on this divergence. We cannot continue to have price move higher and MACD move lower. One of two things is going to happen. Price is going to continue to chop, and maybe we get some strength on Monday and Tuesday, and if that happens, this MACD is probably going to be curling back up. And if we do get a MACD cross higher, trading is going to be much easier for swing positions. So if that doesn't happen and we confirm price weakness below this 410.60, then things could be, technically in a downtrend, and things could get very choppy and nasty and ugly and potentially fill some gaps in here. You see we have a gap in this area right here between the, let's see, what is this? The basically 400, 401 levels. So keep a close eye on that. If we start breaking below some key levels, keep an open mind. There are some gaps below to fill. Now, also one thing to talk about is seasonality, and we also talked about this in the podcast that I'll be linking. The podcast on Saturday, we talked about seasonality, and the saying goes, sell in May and go away. So we are finally in the month of May, so we are going to see if that scenario plays out. I am keeping an open mind for all possibilities. I am reacting to price, as should you. Key levels for us and our members is this 418.25, where we can continue to see price, start to make consecutive closes above this level. I do think that MACD will start to curl and move higher, and then trading will be much easier in this uptrend. Until that happens, I am skeptical of this uptrend. All right. So once again, I'm not pressing long. I am keeping an open mind. I'm not getting too aggressive just yet because this market hasn't given me the signal to get very aggressive. Does that make me bearish? Absolutely not. If we look at the higher time frames like the monthly, you can see we are going absolutely parabolic. And also on the weekly time frame, the weekly candle from last week doesn't look great. But that's completely fine. We're still above the cloud. The MACD is still moving higher. Don't be surprised if we come back and, just have a little drawback on the weekly time frame, which honestly is much needed. And we're actually setting up for that on the daily time frame as well. So long story short, keep a very open mind. Do not be pressing at these levels up here until we see price strength confirmation above Thursday's high. And if you're hyper aggressive, you can start to get long above this 418.25. And trading will become easier when we get momentum in our corner and we get this MACD curling higher on a daily time frame. All right, so that's what I got for you guys for this week, my approach to the market. Let's go ahead and take a look at tech. Tech is technically doing a double top here. We're back below this 338.19 level. Very similar story, right? We want to see price strength confirmation above these highs before we feel very confident in our positions. What's going on in the crypto world? Well, I mentioned this 5750 would be a level that we would need to see Bitcoin get back above before we started seeing some more swing longs. You can see that, yes, we are encountering some resistance right here, and now technically we're back below the 50-day moving average. However, Ethereum, which is my biggest holding right now in the crypto space, and for good reason, it's leading. Those of you that follow me and our members know that we are involved with what is leading the market right now in the crypto space. It is Ethereum. We are still long ETH from this 17. I really don't plan on selling that unless, my stop gets hit. My stop is literally just above my entry price. So, we'll see if we ever get stopped out on this trade. It could be something that I hold until infinity. So that'd be really nice. Just to wrap up real quick, one more time. 418.25 is a key level. You can start to get long above that level. I wouldn't get aggressively long until we can get back above Thursday's high. We are technically in an uptrend, but it is very, very suspect. We are entering the month of May where we have the saying of sell in May and go away. I am still extremely bullish this market on the long term. If you're really conservative, make sure that if we start breaking trend, if we start breaking, the 415 level, it's definitely time to be cautious. And if we start breaking the 410 level, then we've got some gaps below to fill. Hope this video was helpful. I'll see you guys on the open tomorrow. Take care.